All right, CTM, here we go. What's going on, everyone? I hope you're well and doing great as we get started on this Tuesday session. The headline here might be a little bit clickbaity. Looser monetary policy coming suggests tactical buy signals. All right, CTM. Looking here at the market putting in a nice 2% day. NASDAQ up 2%. S&P 500, Russell, Dow, all green. Bitcoin finally able to put up some green 1% over here. And look at Ethereum lagging. Also notice over here, Cardano lagging as well. Those are the two that we're currently tactically short. Let's go ahead and just check in on Ethereum over here. And Ethereum, you can see still holding this short trade over here, currently 15% into profit, as well as Cardano holding an open short trade here, 16% into profit as well. So you can see the weakness continues to remain weak over here. Today we saw some really favorable inflation data. PPI coming in below expectations. We saw PPI annual inflation rises to 2.2%, below expectations of 2.3. So it was a beat by 0.1%. And then you saw core PPI inflation increase to 2.4 year over year compared to forecast of a gain of 2.7. It does look like a cut is coming in September. Now, tomorrow is the CPI reading. And of course, if there's any surprise outsized to the upside, that could go ahead and drastically reduce and very quickly expectations for a September cut. So tomorrow's data, in a sense, is way more important than today's. It's either going to confirm or it's going to conflict. And if we have a conflict, it looks to me that the markets are saying what price action is suggestion is that, yes, indeed, if tomorrow's CPI data comes in favorable, if it comes in benign, we're going to see a continue rise here in price. Is that suggest that we have any type of buy signals coming into the market? We'll look at that very clearly in a second. The question that remains and will remain is what happens as the Fed cuts in September? Does that become either a sell the first cut type trigger? And is that where the markets are going to near term put in a top? You all know better than anyone else. It really matters whether or not they're cutting into normalization or they're cutting into a slowdown. If you ask me right now, which of the two is happening, I would have to say that there's clear signs that the cracks continue to widen. However, currently there is no slowdown occurring. So that means that we're going to have to continue to take it day by day, session by session, high impact news event by high impact news event. I don't think this is setting up any particular situation here right now where people feel that the pullback has been favorable enough that the risk to reward is there. I think that you have to be you can't marry any position and you want to take things as they come. Let's just take a look around and see what's going on. We'll start off here. We'll start off with stocks so that we're looking at here at stocks leading. Remember what happened in 2019? I remember very clearly. I've often pointed to us being in a similar phase of the Fed cycle as we were in 2019. You can see over here, I'm going to go to 2019, and I'm looking for September. So June over here is the cuts begin over here, actually. Last cycle, the cuts begin July 2019. Shortly thereafter, you saw actually equity markets top out. Now, don't forget, it was June 2019 where Bitcoin topped out and then underwent a very strong pullback on a closing basis over 40%. And you saw into the first cuts, NASDAQ come into decline, and then something happened. By September, they had cut 75 basis points, and then you begin to see the market stabilize and then literally melt up. Look at that price action. Not make a high over here, but melt up. That was because the Fed at that particular point in time was undergoing balance sheet expansion. Let's look at that same period coming into 2019 as far as Bitcoin. So you can see Bitcoin peaks a month before equity markets peak, right before that first cut, and then they undergo what is a strong decline. I'm not talking about the COVID lows. I'm talking about the decline just as Fed begins not only cutting 75 basis points, but then the balance sheet expansion starts here. Bitcoin initially, very favorable reaction, comes out, takes out lows. Look at this horizontal underbelly. You can see the support over here, then resistance, the break above. Then Bitcoin finally finds a footing, and then it does what I believe would have been a sustained uptrend into the 2020 halving, May 2020 halving, if it had not been for the global lockdowns and everything that had ensued. So this time of cycle, when I talk about this time of cycle, I'm not talking about Bitcoin's 4-year cycle. And we did take a look just on Friday of where Bitcoin is in relation to previous cycles as far as off its lows. And it seems to be right on time when looking in through the lens of the 4-year cycle off of the lows. And we have that like little reminder that potentially a few months from now, Bitcoin might be off to the races doing Bitcoin things. We want to be watching out for that. And we have obviously the election taking place around that same time frame. And if you look at election year seasonalities, they do point to a very favorable period to occur right around that 90-day period over here, as you could see into November, December, which is also very favorable time for Bitcoin. So I don't think any of us would be surprised if we were to see towards the end of this year Bitcoin begin running. Now, we don't know what's going to happen. And what I mean by that is we could see the Fed begin cutting, and we could see the market actually react favorably to that in the beginning. Market's probably smart enough to understand right now that there is no imminent recession. And then a few months later, we have to watch the data. If we continue to see the job markets go the wrong way, and that could change. Like a soft landing is still possible, but in order for that to happen, you would need to see a lot of jobs being added to the economy. We're far from that, so we're not going to look at that right now. Oof. Loud and clear in a good way or a bad way? I didn't even do a mic check with you all. I hope that we got a nice or a better, I should say, audio situation than yesterday. Please let me know in the comments. So we're seeing finally Bitcoin here gaining a footing and being able to catch up here to the equity markets. But no doubt, this is a more favorable time for equities than it is for Bitcoin. So we'll just keep an eye on that. This is a chart that we have been reflecting on quite often, and it shows the structure. All those lines are the structure of the market. They actually go back over 10 years on Bitcoin, and they maintain to this day. I have them over here starting in 2013, 11 years, the same structure holds. Now, it does go back into these areas as well. Why that happens, I have no idea. It probably has to do with some type of characteristic towards markets. Each one has their own unique structure. It's why I believe when modeling that each one is actually fitted. Now, there's a difference between fitting and overfitting. I'm just going to jump over to this chart over here that we used to look at. And I wonder, it's a lot cleaner. I wonder if that's all we need. I wonder if sometimes we get a little bit too lost in the immediate day-to-day and price action. This one looks a lot cleaner, easier on the eyes for me. Hasn't been touched. I can't remember the last time we even looked at it. It's been many, many months. And you can see that we are, the lines that we do have in are the important ones. I find myself, though, not really viewing these discretionary charts and focusing solely on our mechanical charts, right? Because this is really what matters. Right now, Bitcoin continues to be on the sidelines. I talked about tactical buy signals. So I want to get into Bitcoin with you in 1 second. But first, I want to just jump over to equities to tie up what we've been looking at and talking about at the beginning of this session over here in equities and tactical buy signals. And you can see every template that we are looking at over here, TQQQ, NVIDIA, FNGU, and Tesla are all right now on the sidelines. They're undecided whether or not the next move is going to be. Some of these are buy side only. FNGU is buy side only. TQQQ is buy side only. NVIDIA could trade both ways. Tesla could trade both ways. If you take a look with the last time we exited, right? Although a decent amount of profit was given up off of the peak on TQQQ, a decent amount was given up off of FANG. NVIDIA did a fantastic job of locking in gains, and Tesla also giving back gains, each one of them taking sizable gains, though, nevertheless. It's just the nature of what we're doing. The exit and being on the sideline since throughout that 17% correction on the NASDAQ has been the correct place to be. Knowing when to be in the market and when out of the market is just as important. Are we seeing anything that suggests that we're about to enter into the market on the long side? Well, we kind of V'd up or V'ing up off of the long over here. We're getting closer to a potential buy side deviation enter into the market. Probably and likely tomorrow's data and the reaction of the market off of it is going to let us know whether or not we are going to be taking new positions, buy positions. I would never take a buy position solely on, for example, today's inflation data coming in a little bit softer than expected, especially not understanding that tomorrow is followed by CPI data. And again, you could have conflicting signals over here. If there's any sign, if there's any suggestion that actually inflation does not continue to head down towards the path that the Fed is expecting, that could definitely and quickly derail expectations for a September cut. Huge data point tomorrow. We'll take a look at it as we come back tomorrow. Can we see if the January 2024 downwick on your clean Bitcoin chart? Let's take a look at that, and then we'll come back over and we'll look at the equities over here. So I want to come back to the clean. By the way, here is the pattern that we've been looking at, what is like a descending triangle without a horizontal top. We looked at this price action on the NASDAQ in October of 2023, which put in a very similar wick down over here. We've looked at this price action in Bitcoin in 2020. Except I don't have the same fractal now as we did last time, so I digress. But the clean chart over here, and you're looking at January 2024, and ACE is focused, I believe, on this wick in January down over here. Now notice, and I'm going to show you the two. I have off of what looks like support over here, I put that structural line. ACE is noticing the little bit of a gap here, the gap over here. And if you come down to this, I thought we added it. I apologize. So I'm going to go ahead and clone this for 1 second. And then I'm going to bring this down. I'm going to focus off the low right over here. And then you could see the perfect touch on that one as well. And I think that's what ACE is focused in on. And we have clean and more. So this one belongs here because this one is obviously much more, many more lines, but nice catch. Good eye, ACE, watching that. And I guess we'll keep it on the clean one as well. It deserves to be over there. Jumping back over to the equity markets. So you could see, and we're coming into that little bit of discretionary trendline resistance as we speak right now. We're currently still on the sidelines. We're waiting for further upside momentum. Yes, it does seem that if we get favorable inflation data tomorrow, that the markets are going to be into that cut. The meeting, by the way, when's the September meeting? Does anyone have the date on hand? Let me give it to you just so we have that needed awareness. And September 18th. So between tomorrow's CPI data and the meeting itself, you're looking at 1 month. And outside of anything happening, what are you talking about? Anything happening? An unforeseen event happening anywhere around the world. Obviously, geopolitical hotspots are powder kegs that at any moment could seriously escalate. That initially could definitely derail market behavior and positions. But it seems like that the market here, if we were to get favorable inflation data tomorrow, is suggesting that it would be rising and pumping into the meeting. Now, there's long overdue speculation that, it's sell the first cut is going to be what it winds up being. I don't know. We don't need to know. We like to navigate it in real time together as best we can, and we do a fantastic job about that. But we know that we have over here a black and white plan to follow that's going to keep us on the right side. It's too soon to say whether or not this peak that we saw over here over the summer in 2024 winds up being nothing more than Wall Street cheat sheet coming back. And are we about to enter into, okay, everything's normal. Equity's about to pump to new all-time highs. Bitcoin maybe is going to make its next leg up. Yes, it does seem like it's struggling, but all it's been doing is been consolidating very, very neatly. So I'm going to just jump back to the consolidation and to see off of the 2023, January 2023 lows, see price make a 357% gain. It's really consolidating nicely thus far. Yes, and since mid-April, we've talked about, hey, listen, like I this is not like the moment for alt season to kick off. Where at some point between the first Fed cut, we have balance sheet runoff. Fed's balance sheet continues to run off. Quantitative tightenings happen. Just be cautious. This is not really like a favorable time for Bitcoin. Now, if we broke out the resistance above over here and it happens to coincide with past cycle behavior off the low, yeah, we're going to be watching and our expectations are going to be some for follow through on the upside. And we'll track it and we'll watch it. We'll also be looking for invalidation of a breakout at all times. Right now, all that's happening is we're consolidating. So looks pretty good. Looks pretty bullish. That could change very quickly. All of our stock templates look very similar over here. Jumping over to NVIDIA, it is getting ready here to trigger once again to the upside. Don't forget these moves on NVIDIA have surprised a lot of people, whether it was holding into the earnings, whether it was this one surprised me. The magnitude of this run up. This one also, well, this one surprised me less after this one, but huge run ups. And again, a lot of people, the entire bull move has been saying, well, this has been overbought and it doesn't make any sense. The valuations, they're calling it a bubble and saying the valuations don't make any sense. Yet, if that's the case, there's massive upside to be had if you know when to be in the market and when out and on what side. We could be getting ready here to attack the long side once again after being safe and protected on the sidelines. And Tesla lagging a little bit behind everything else that we just looked at. So Tesla continues to lag over here, would be the last one entering if it were to enter onto the buy side. Let me just give you a quick view before we get into stocks. And so I feel like let me just pivot for 1 second, follow the conversation, work within the conversation. And if we come back to over here, so it was on the break of 66,000 that was the technical breakdown and we called it in real time, like bullish up until that 66,000 breakdown. And at that point in time, we put out what expectations were, including to just getting on the thread. We did the videos together. You know, you were here. We also did a public thread on Twitter, and we talked about if we lost the previous cycle ceiling, which, just so you know, the previous cycle ceiling was over here at this point, right over here, just below 60K, that we had this structural trend line over here, and that we could trade to just below 55,000 Bitcoin is cheap. That transpired. And then after that, what we saw happen was the first repair made above 60,500. We called that, pointed it out together, and then we were able to regain what I thought was a meaningful repair above 66,000. And then you see that sharp sell off during the unwind. No, we were not like navigating this together in so much as that that's when I was in Bosnia. We were away those 2 weeks and whatnot. We had the massive Japanese unwind, and where we are today. Let's just pick off where we are today. We came into this bolded structural resistance, came back and tagged. I'm going to make myself really bullish here, and tagged the bottom line of the previous cycle ceiling. Previous cycle ceiling is not the high point of last cycle. It's where price establishes resistance, right? And that is over here, what it's now flipping into support. Yeah, 3 times it's come back below. We're well aware of that. The previous cycle ceiling, by the way, going back to 2017, is what led us to call the bull market breakout of December 2022, confirmed in January 2023. This makes me very bullish, seeing right now price coming back, testing that previous cycle ceiling, lower band support, and now trying to kick up. If we get above right over here, 62,600, above this bolded line, the very, very like great repairs have been made. So it's hard to say in front of tomorrow's high impact news event, but that would be very, very bullish. My bearish scenario, I felt like the caution has played out. Now, nothing has changed though. What were you talking about? Well, what we saw happen was a technical breakdown that played out, recovery. We saw an unforeseen event. Not that it was unforeseen. We've been tracking and watching the $20 trillion Japanese yen carry trade for the last couple of months, but no idea, or no one has any idea when it was going to pop. I thought as the Fed begins cutting rates, is that what would trigger the unwind? Instead, it was the Bank of Japan raising rates another 0.15%. But we were watching and waiting, and that's what triggered that. Looks like we've seen or in the process of seeing pretty good recovery from that, but nothing has changed as far as the caution pointed out over in April. And the caution of April was watch out, time a cycle as Fed begins cutting and quantitative tightening is running off. And you could look at things showing pressures in the system, such as reverse repo getting to its lowest level in a few years. You know, as this continues to wind down, that sets up further potential stress on the market. But we did talk about this whole time that, well, likely this time it's not going to come from here. And it could come from something like Japan, Europe, or maybe the commercial credit. Maybe as we move into next year, 2025, 2026, some type of interventions needed in order to help banks that are holding, let's just say, bad investments. But as far as the bearish case right now, or are you wondering like what would be the? I can't say what would be the worst if we enter into any type of crisis. And don't forget, let me just point out, we talked about cutting into normalization. We talked about cutting into to recession, but you also have panic cuts. And usually out of panic cuts, price action is, everyone remembers 2020. Equity markets, Bitcoin, everyone remembers all of it, right? This is panic. And out of the panic is normally beach ball. And you could see it right over here, not just from what happened in 2020, but looking back for the last 10 rate cut cycles on the S&P 500. Out of the panic would come some type of, once that's over, some type of beach ball effect. Is that what, in a panic though? I don't know what we would be looking at as far as bearish case scenario. And if you looked at in 2020, you saw a 62% correction, and that was influenced also by BitMEX, which was the main futures derivatives of Bitcoin, the most volume by far taking place. It went into a liquidation loop, causing an extended drawdown. You have a 50% correction into what is very strong structural support, the bull market breakout. This one was tested during the March banking crisis. And then right over here, as the SEC opened up litigation versus Binance and Coinbase, this was saved in a sense by BlackRock filing their ETF application. So that's really strong support. That's currently around 45% from where market is, right? No one believes. We got a thumbs down. But let me explain then to help you to understand, because we did this in real time and you weren't there. So you could see over here at this particular point in time, you see that SEC files their litigation versus SEC and Binance. And then the day after, BlackRock files their ETF application. And you could see the immediate price reaction that occurred. Now, in this time, what it was happening over here? Well, this is where we were having a battle. SEC was still fighting the approvals of the spot ETFs until this particular date right over here. Right over here, Grayscale wins a court case saying that the SEC has to allow them to roll their fund over into a spot ETF. Immediate price action, very favorable. Then it was given back over here. And I digress. I don't know whether that was here or here, so I'm not sure. But right around this time, yeah, it was here, right? Sorry that I don't remember with clarity this 3-week period. I believe it's here, favorable ruling, and then this is the intern leak that the spot ETFs are going to be improved. This was all run by favorable set of circumstances, a massive inflows potential, a Wall Street adoption taking place of Bitcoin. If that all didn't transpire like that, I think that we would have had a test of the bull market breakout if we didn't get the ruling at the particular time we got it. Now, as far as what could happen on the downside, though, I don't try to look at these. You got an important area over here. So I'm going to extend it to the right and just make it bolder for this one moment over here. And then in a crisis, imagine breaking the bull market breakout trend line. And then we have over here, look at this. I mean, if this were to happen by January, you could see that coinciding with massive support, horizontal support, right, off of this area over here. So, I mean, that's a 60% drawdown. I don't think that would happen. I mean, who knows what could happen? It's the markets. That's why you have to take it day by day. That's why anyone who's like trying to put together what's going to happen 6 months from now, even 3 months from now, yeah, I don't see the edge in that. We do a good job following technical breakouts, breakdowns, repairs, and staying on the right side in real time. I don't know many people who've been able to stay on the right side. We've been doing this since late 2019 together through many different cycles, through bull market, through crisis. Yes, markets are not crashing. Now they're crashing until the recovery, where, don't forget, it wasn't until the summer of 2020 where finally most people realized, most macro professionals realized that, okay, it's up only. It was in April that we forbid, tongue in cheek, anyone from selling. It's only buy. This is like massive asset inflationary what the Fed just did. And Yeah, I mean, you got to take it as it comes. It's the markets. So, could we see something like a 60% correction? Oh, yeah. Do I think that's going to happen? Probably not. Do I know what could be happening to cause a correction of that magnitude or further? No. Let's take it as it comes. And right now though, it looks like, markets are more focused in on actually what's happening a month ahead and that September meeting where the Fed is going to finally begin looser monetary policy. Now, will a 25 basis cut have any effect whatsoever on the market? Likely not, just as a 25% hike or the last, I should say, set of serious hikes had really no effect on the market. Probably a 25, 50, 75 basis point cut, really not going to have too much of an effect on the market. Nevertheless, it doesn't mean that the market is not going to be inviting that. I would really watch what happens into that first cut, watching how the Russell performs to see if we have any further outsized rotation into the Russell from tech and to watch how it performs. It seems to me that what's happening here is that for the assuming tomorrow's CPI data is favorable, that what we're seeing and we're going to see is a continued uptrend the rest of the summer into that meeting. And then we'll have to see what the market's reaction is at that point. Obviously, there is countless things that could derail that at any point in time, including geopolitical, including, non-farm payrolls first September, first Friday of September. If we saw like all of a sudden, for whatever reason, like a massive addition of jobs and strengthening of the market, who knows? I mean, that's always as it is, and that's always as it is because there's nothing clear about it. The only clear was in April 2020. Clear was this. There was only two clear levels that we have for that I've had, and I raised my hand. I say, well, I've navigated with all of you this past 5 years extraordinarily well. And the only clarity at any point in time was right here to the markets are going to crash. This is the like into end of January, early February, before anyone else except Eric Townsend of Macro Voices saw it as well. You know, this was turn your swing trades into position trades and assume crash positions. And then the only other clear thing was finally in April, you're forbidden to sell. This is uber asset inflationary. Buy, 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 buy. Those were the only two clear moments, right? The only two clear moments. And I mean, maybe on Bitcoin itself, as we had that massive bull market breakout over here, and we came into that first, move into 16. And I was like, do not sell, risk is to the upside. Do not sell, risk is to the upside. Those were all the only clear moments that we've had. And even over here, you could talk about bull market breakout, back to the short side, back to the long side. That's not clear. It's always kind of like there's always tension. And you could look back and you could say, well, we called the bull market breakout. Then we called the first repair above the log scale, and then the second repair above this line over here. But this like price now has ended up over here. But the whole time for me, it was where are we wrong? Where are we wrong? Where are we going to hit the bull market invalidation? So Samuel, this is my chicken scratch that you're looking at over here. It's just my chicken scratch that I use on our streams over here. Let's get into it. Bitcoin remains on the sidelines and getting very close over here, just as I was getting excited. These charts are for CTM though, Samuel, and all of our charts are for CTM, which which you of course are welcome to join us. But this is Bitcoin here, and you saw that as Vakanet was like, what's the bearish situation? And then I'm looking at what's happening over here, and I see this back test. And if we resume up, that's very bullish. It started getting me very bullish. And you can see that while we've been on the sidelines of Bitcoin, exiting first alongside all the way up at 67, taking a short position, stopped out, and just on the sidelines through all of this, right? How many have been shorting this up move after missing the down move? I have no idea, but you could see that as I got bullish from the discretionary point of view, you could see that we are actually pretty close now to attacking on the upside, about $930 away. And also, by the way, if we get that reset above the zero line over here, if the green or the red line trades above the zero line, that also opens up the short side once again to be attacked. And you could see how easily this could roll over. This is the trend line to be watching. A break of that trend line, that would say and suggest that this massive move down. So here's a bear scenario for you. That is nothing more than a bearish relief continuation pattern in play over here, and a breakdown over here if that's occurring. If we get a little bit more relief to the upside, another $800 or so, and closing above it, that would send us ready for attacking both sides. So great position to be in at the right time. Bitcoin, Ethereum, Cardano, Solana. That's what I wanted to show you. I wanted to show you this and move back into looking not just at stocks from this perspective, but putting them together. So you can see over here, you have Bitcoin on the 8-hour, and you have Ethereum on the 8-hour, and then you have NVIDIA on the daily and Tesla on the daily. And notice this, at this particular point in time in March, you see that Bitcoin goes sideways. Bitcoin has been in a massive consolidation, the one that we just looked at, ever since March 14th. And again, after a 350% move to the upside, it is, consolidating very well thus far. And during this period, though, we're not making any new all-time highs on our Bitcoin trading. You can see over here, we tag a new high, but no follow through. And we're just right over here kissing the sky towards new all-time highs. But look what happens as you go down below. Look what happens in NVIDIA over here in May. NVIDIA making a massive 40% gain over here. Why Bitcoin was doing nothing, going sideways. Ethereum, again, kissing the sky, new all-time highs. Look at Tesla down over here in July as NVIDIA is out of the market, putting in those gains. And you could also look at that from the perspective of daily. So this is buy side only on Bitcoin. And then again, NVIDIA and Tesla on the daily. I'm having NVIDIA and Tesla because their stop losses are very small. I have Bitcoin and Ethereum because also their stop losses are small. So you're able to kind of use something like more advanced buy side boost within these two templates, the salsa tango. So you can see over here, again, you can see Tesla on the daily here as Bitcoin, as NVIDIA and Ethereum are really not doing anything, making those new all-time highs over here, and how they work together. Here's NVIDIA carrying the torch. And then I wonder, this is like, and I lean towards the 8 side, the 8-hour personally on Ethereum and Bitcoin. And over here I have them on the daily. So I'm going to change that. But you could also add in Tesla. You could also add Solana, FNGU, and TQQQ. And this offers and opens up a really, really, really diverse allocation between stocks and crypto, and between, let me just go ahead and continue over here, and between, for example, as you look at crypto itself, Bitcoin, Ethereum, Cardano, Solana, each one of these has their own turn, like where that liquidity is flowing into it and it's moving up. A glaring example is over here at the fourth quarter of 2023, as both Bitcoin and Ethereum go sideways. Really, really strong gains coming out of Solana. Later on, after that, really strong gains out of Cardano. And then you could see the big moves that occur after on Bitcoin and Ethereum. So, what else? I did some more work yesterday on Solana and us trying to come up with a mean reversion solution, making a little bit of progress, right? Right. You could say, well, Solana on its own, this is since 2023, since 2021, right? As it is for all of our solutions, we go through periods what we call running sideways. And what running sideways is where after, like, again, it looks like profits up and to the right all the time. Most of the time, it's going sideways, grinding through trades until you catch that next uptrend. It's a momentum based system. There's the theory, and it's just a theory right now, that including a mean reversion strategy would fill the holes when things are real. Oh, I heard, Parabu, by the way, I mentioned it. I heard on the Twitter that there was a massive carnage in the UK unemployment market. I mean, it might have something to do with the situation. I'm not even allowed to talk about the situation right inside the UK right now that's taking place. Loser. That's classic Jordan. That's beautiful. Boom, 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 boom. So, the void, filling the void, as magnificent as these solutions are. This is Bitcoin, magnificent solutions, unbelievable solutions. There's always room for progress. In this area here, between March and today, that's a window for progress. This area over here between October and into February, that's a window for progress. You can see over here, this is where we have drawdown on the account. That's where we had drawdown on the account. Here's a look at Bitcoin. And this is work that's just beginning to be produced within CTM. Right now, it's in CTM Core. We have a lot of people working within it. Michelle was asking about Revert 1.2. I don't even think that the template has been put out there yet. We will. But I was toying around with Bitcoin, and this is 2016 to present on a mean reversion. So again, this is our foundational strategy in place on Bitcoin. And you go from 2016 to present, and you're looking at a 262,000% return with a 12.5% drawdown. That's phenomenal. I mean, just for some perspective, since the bear market of 2022, I mean, 255% with a 12.5% drawdown. That's phenomenal over 2.5 year period, right? I'm not including the bull market, obviously. I started in the bear market. Now, this is, you could say, well, how does that compare? 6,000, 20% drawdown, that doesn't compare to 200. Well, again, this is meant to perform during the holes. So I talked about one of the recent holes was since March. And you can see since March, we're in this drawdown on Bitcoin. Here's March, and there's this like, yeah, we've tagged back to new all-time highs, but we not any forward progress. And a mean reversion is looking to fill that void. So over here you have, just to confirm, yep, perfect. So over here you have starting in March 14th. This starts over here trading in March 14th till today. And you can see 6% drawdown, 80% gain, which is obviously phenomenal. So could you imagine now taking this and in the situation here where it's just running sideways, being able to not run sideways, but be adding alpha, adding gains. Now, I don't know how the two are ultimately going to work together. Right now, our mission is to develop some mean reversion templates. And this goes back to things that we've been talking about at the beginning of 2024. We have at the top of the pyramid our foundational solutions in both select tech stocks and select crypto. CTM 2.0, CTM 2.x. We want to add in the CTM kicker and the mean reversion. Right now, a lot of mean reversion work has in the last few weeks has begun being born. This is the direction that I continue. I think this is a great start. It's only 25% modeled. I think that we could do better. Here's another period over here. This is that other period where I was showing you over here. This is between October 2023 and into February. We're running sideways. You can see the drawdown that's occurring over here. You can see I'm circling the drawdown that's occurring. And the mean reversion during that period, 16% gain. That completely erases the drawdown. I don't know how it works together. That we're not there yet. But could you imagine as you start making this upward move, which is at this point a 12% gain, if you're making the 12% gain already actually into profit, I mean, you're taking what we have here and you're exponentially improving on it. So I'm really excited about the potential gains that are taking place over here. My next step is twofold. I need to continue looking at how to improve upon this. Lower drawdown is always welcomed. Usually that then adds to higher return. I'll do as much as I can and then pass it off to the team. And then the second thing is learning and finding out how they could interact together. Because during this period over here from March 14th until today on Bitcoin, on our foundational momentum solution, like we're taking trades. So it needs to be determined how the two could ultimately work together. Solana also, I've been looking to try to fill this hole that we have on Solana. As you can see over here on our template, Solana, ever since the same period, like we're going sideways. And in this sideways range, we're into drawdown, which is expected. That's what always happens as we enter any type of sideways momentum. All right, hey, I'm ready to give it to you. For real. You see that sideways price action, a mean reversion potentially on Solana will also work out well. I've made some progress. I don't love it, but it's good. I mean, this is from 2021 to present, right? 36% drawdowns, a little high for me. If you put it in 50% positions, that might be better. 18% drawdown, 500% return. Don't forget, we're not looking to make our gains off the mean reversion. I mean, the gains are welcomed. And you can see on Bitcoin since March, there's been an 80% gain. That's sizable. That's not something small. That's immense, right? But even if it only filled the void of running sideways drawdown, that's good in itself. Now, if you look at the period since March on Solana, yes, that is immense. It's a 200% gain. If you were using a 50% position size, 77% gain with an 18% drawdown, that's really beautiful, except there's nothing like for this part to be instead of a 20% drawdown to put in a 70% gain, that's immense. There are other periods of drawdown. There's this period over here and this period over here. And thus far, the hole is not really filled. This is looking at a 3% gain during that period, that's not really selling it for me. It's during this period here, or it's during this period here. I don't know which of the two. I think it's this one. This one over here, a 1% gain, that's coming in from the other one. So let's go back and look at what price was doing in this area, 35. It's not doing it for me. The Bitcoin actually looks extraordinarily promising. This is going back to September of 2020. So we come back to September of 2022. So this whole area, ugh. And I guess this probably put a hurt. It's a mean reversion. So when you have the expansion downwards and then the expansion up, that's not good for a mean reversion. And you can see the performance is break even. And likely it's break even because of the price action. Like, this is cleaning up. This is bad. This is bad. So it doesn't offer any advantage. And that's okay too, especially if, in this period to offer a massive advantage, but we could do better. This is early phase here. And it's a start. I could say on Bitcoin, it's a good start. This is something of real promise from my perspective, especially since these gains on the mean reversion are coming towards where Bitcoin goes into drawdown. Hypernova, I've said, well, I don't know how the two would work together. I don't know whether it's something like a overlay, meaning you have 100% of capital and you're trading 50% into to foundational BTC 107 and 50% on the mean reversion. And that would that reduce overall profits from BTC 107? Yes. Would that smooth out the equity curve upwards and to the right? A lot. I don't know if it's 70%, 75% BTC 107, 25% mean reversion. And I don't also know if it's something more like buy side boost, where and that's what, when I said what I want to do next is twofold. I want to continue pushing here to try to improve upon this, and including passing that off to others within CTM for them to break it and make it better. Someone in CTM could take this and they can make this like 25,000 with a 15% drawdown. That could happen. I wouldn't be surprised. I would expect it. Maybe it doesn't happen, but I would expect that's what would happen. And then the second thing that needs to be done is trying to figure out how the two could be incorporated together. And again, right now I'm just building proof of concept. So I haven't gotten there, but those questions are in my mind, and which is why I'm trying to say I don't know yet how they're gonna, the relationship and how they would work out. And then there's also the possibility that in the end, we don't even need the mean reversion, because we've just begun innovation on mean reversion. I can't imagine what's to come. But if at any point in time we're able to turn our foundational moat strategies into something that is able to outperform and navigate those circumstances better, bring it on. We just want the best of the best, and whatever that might be. So what else? Except to say, happy Taco Tuesday. I wish I had Head Snack geared up over here to play with y'all today. But thanks for being here for this session. And today we have like work to do. When we talk about mean reversion, thank you, Ace. When we talk about mean reversion and the work that's being done, like, there's nothing easy about any of this. If you look at what we have built and now you could look at it, oh, well, yeah, There's nothing easy about anything that we do here. And we just continue on each and every day, showing up, putting the work in. For sure, the fruits are abundant and it's beautiful, but we just keep working. So need to get some mean reversion templates over preferred candidates to look at buy side boost. David, like wait a week or two. I mean, this is good. I have a feeling that the hive mind can make this a lot better. But so I spent Saturday modeling this. All day yesterday was spent. We didn't have anything on Solana yesterday. Remember? I just showed you like what could happen, but I said that this is not and then I spent all day today up until we went live modeling Solana. And as I showed you, like, yes, it works well during March of this year till today, extraordinarily well. But overall, that's not a pleasing solution to me. Bitcoin is super promising, but let me spend now up until tomorrow's live stream more time modeling this. Then I'll pass it off. And then whatever could be done after I pass it off, then we'll get it to you, David, to do take a look at the relationship between BTC 107, or if you're looking at David, when you trade buy side boost, you're not trading BTC 107, right? I assume that you're trading. I assume you're trading buy side only. Is that correct? BTC 101. Look what a tremendous. We're just waiting on ST2 over here to trigger. So very close to entry over here as well. But could you confirm that? Are you using BTC 101 on your buy side boost? Because then obviously, assuming that you are, you need to look at this with an overlay of the mean reversion, and then you'll be able to begin figure out when and how maybe a relationship could work between the two. And before that happens, I'll have already spent a moment trying to see the relationship between the two, and I'll pass that. I'll pass that. We'll have to open up a new channel in the Discord under buy side boost for this work. So someone think of a name, and then I'll let you know, and then we'll set you to work. All right, everyone. Have a beautiful, beautiful day. Tomorrow, huge high impact news event, CPI. We'll be at it again tomorrow. Have a beautiful day, everyone. God bless you. Have a beautiful day.